Welcome to Momentum Monday. Today is June 26th, 2022. Howard here, you're a stand-up comedian now. That was a joke.
Yeah, I did a few minutes with friends. It wasn't like it was more storytelling, but it was full house. It was fun in New York, Laugh Lounge. Starting a new comedy company.
Awesome.
Yes, sir. Speaking of comedy, the markets, take it away.
The markets, yeah. I mean, last week was basically a big mean reversion week. It seems like the market is taking Fed's recent language and narrative seriously, like the recent 75 basis points interest rates hike, and also the comments that the Fed wants to bring inflation down under 2%. So at this point, the market is kind of discounting a potential recession 6 to 9 months in the future, and potentially the Fed starting to cut rates at some point next year. And this is why we saw the weakest groups here to date absolutely outperforming last week. ARK was up like 18%. The cloud ETF was up like 15, something like this.
Look at the damage, up 15%, but still down like 80%.
Yeah, we're talking about last week. Biotech was up like 14%. So really the worst hit sectors gained the most. And then the one sector that really was up year to date, energy, was, did the worst, was absolutely slaughtered. XOP is down 30% for the past 2-3 weeks.
Where's Exxon? Exxon gave back most of its.
Yeah, I mean, they're all testing their 200-day moving average.
Yeah, I was looking at Exxon here just as a buy. If it dropped down to 80, just if you go back to the monthly, you can just see like it should hold.
Okay, this is the weekly.
And oil's still above 100. So I'm saying, like, if you ever wanted to buy them.
Yeah, and I mean, the market is really worried about recession. Obviously, demand for oil will drop, and the market is kind of discounting that. But who knows? As they said, the market is better at predicting the news than the news is predicting the market. So the market might be discounting something that very few people know about. There could be peace in Ukraine or soft landing. You never know. But that's why we're just paying attention to price action, as we are not institutions that are actually moving prices. And
rates didn't move, so I'm a little skeptical here that we can.
Yeah, it could be just a short-term relief rally. They bounced a little bit. I mean,
no, but I'm saying oil's still 100. Mood is terrible on my end. Like, I mean, granted, I'm in a bad mood, but the mood is terrible in tech, and prices are still outrageously high. So, and people are just getting their pink slips. I'm seeing all the 30% cuts through my portfolio and other portfolios. So it's inside, everybody's sharing data, at my level. And so mood's terrible. I mean, if you're a recruiter, it's a great time. Like Indeed, like there's so many people moving through the system, going to find new jobs. And this is when, I was talking about this with Josh Brown and Michael, if, on their podcast this weekend, and I was kind of rambling, but I'll save my good ideas for us. But, this would be the moment. What worries me about tech right now, pull up software, for example, we got to hold right here. So software needs to hold, more than I would say the cloud. The cloud is going to hold at some point, but software is what needs to hold in terms of valuations here at this level. And, and then I look at Shopify and e-commerce, and I'm like, it has to hold this 300 level. It held it pretty firm last week, and we shot up right to the, look how far below the 200-day moving averages. So if we look at the market cap of 48 billion, and I can name you 30 brands that if you added up the e-commerce valuation, that would equal Shopify, brands that use Shopify. So there's like something off in the market. And so you could see a huge rally, even despite interest rates. You could just see a huge This is supposedly a great company that you're pulling up to, Evan. I don't know much about it, but so it wouldn't surprise me to see a huge rally just to run over some shorts here that are using options, and everybody's leaning on that, not TQQQ, but the SQQQ. Everybody, remember we were making fun of it. People were just, that's like the new easy play. And if you look at the daily, the people got hammered in the last week, hammered, as I thought they would.
Well, the Qs was up what 7%, so the SQQ is down what 21.
I'm saying, people just think that's a toy, and that was a 20% move.
This is the TQQ longer term monthly. Yeah.
But what I was going to say is, you have this turnover, so you're going to have a lot of people starting companies. But do you go to crypto, which is in a bear market, like a true, like, you're not just a bear market, but like immediate, like people just distrust it for good reason at the wrong moment. So where do you go build? And my concern, Ivan, is you have all these smart people maybe going to start a company, but there's not a platform to build on. Like Shopify, doesn't feel like the place. I mean, it's easy to get a business started, don't get me wrong, but how do you build the next billion-dollar businesses if you can't buy customers? Because to go buy them on Facebook and Google right now is expensive. The App Store is impossible to get traction, and crypto has been a bust. So if you want to go raise 10 million to go, in the old days, like when we started StockTwits in that 06, 08 boom, and you were there with us, you go on Twitter and fart around and get leads and customers. You try and go do marketing on Twitter or even StockTwits, we're not going to let you. So there's no platform to help entrepreneurs launch their business really fast, other than create it, easy, set it up, easy, get payments for it, easy. But if you want to go raise 10 million and say, I want to go buy customers, no one's going to give you that money. And if you think you're going to go do that, like it was 2007, 2008, it's going to cost you a fortune, and engineers cost you a fortune. So there's all this inflation to get a company into growth phase, and there's no platform to help them. So I don't think people really understand the dilemma at all the levels of startups.
So you're saying that it costs a lot more to build a startup, but at the same time, you're against the current startup valuation and the money that they're raising.
So you have, so you have this multiple compression because of interest rates, inflation, and the fact that the world is shut down. So you can't, in the Uber days, you say, we're going to open China, and we're going to open Europe, and we're going to open Latin America. But like China and Russia are closed off to you. Like you're not going to get a VC to buy into that bullshit. You're not going to open up China, and it's going to be hard to open up Europe. And buying a customer on Facebook, Google, or Snapchat or Twitter is very expensive. Like 10 years ago, it wasn't. Now it's very expensive. So I think the boom that we should see is in small business, small software businesses. And so I think it's going to be a tough market for venture capitalists and growth funds, and for the IPO market, because you're not going to have the same cooking of startups in the like right now with all these layoffs. It'd be, if this was 07, 08, or there was like some kind of new platform to build on, this would be a great time for the market. But I worry that we're not jamming the system with like great growth companies. So this could be, a prolonged kind of like, when like a mouse moves through a snake, like there's just a giant clog of things not happening. But if you want to build a small business and be really creative about how you get customers, right, between Stripe and like what you do, between Stripe and Shopify, this has never been a better time to start a small business.
It's cheap,
yeah. All right, so that was my rant. Within biotech, anything. So now let's look for what is working, Ivan. Is there anything that's popping up in those industries that like we're bottoming? Anything?
I mean, obviously there were so many stocks that went up 20-30%
No,
last
but any
week.
like all-time highs? Like I saw Vertex in the biotech look pretty interesting. VRTX.
Yeah, definitely the whole group, BMY and okay, let me just go back to the today's date. So yeah, Vertex.
Bristol Myers broke out.
Vertex trying to break out. BMY, like the same group, biotech healthcare.
But biotech's been so weak, so to see a biotech breakout.
Yeah, actually, biotech just experienced its biggest drawdown since.
Yeah, so that's what interests me about Vertex.
2002. So definitely down 64% from all-time highs. Definitely like a real bear market. We're talking about the ETF, like the damage in individual stocks, obviously.
Must be 90. So that's why I say Vertex stood out to me.
It's been worse, yeah. So
yeah.
definitely big moves. Yeah. So biotech, cloud, as I said, software stocks bounced, and also China. I don't know why China is bouncing. I think it's all like related to the little downtick in interest rates that we saw after the Fed meeting last week. It seems like the market is really thinking that what the Fed is doing is going to work, and at some point is going to bring the economy into recession. And this is why, if you're looking like 6 to 9 months ahead, maybe the Fed at this point is going to have to start cutting rates to save the economy. So yeah. If you think that the market is really forward looking, maybe it kind of makes sense, but it could be just a short-term end of the quarter rebalancing.
Yeah, this would be a great week to run the markets, just because the end of the month markups, end of quarter markups.
So definitely, we saw some crazy moves in Chinese stock. This is like a Chinese EV, electric vehicle maker. Like it's almost back at all-time highs. Like it's not like their earnings. I mean, they're not bad, but nothing really special. Valuations is still crazy, like almost 200 PE in this market, and like. So we saw some crazy for me. They're mostly short covering, but short covering can last a long time. It can last a few weeks.
Yeah, I'm watching Shopify. I'm watching for some follow through about 400.
But
I'm watching. I'm watching software, like see if it can get. Again,
so remember that. I mean, even during the deepest and the scariest bear markets, which in the newest history is like 2000, 2002, 2003. Even during that time, there were stocks that went up 5x, 10x during the bear market itself. I mean, I went and I studied it, and even this company Booking, at the point, they went up 10x, right before 9/11. Like they went down 99.5%, like they were almost wiped out. I don't know how they survived, and from there they had like a 10x move in the middle of the bear market. So those short squeezes, they have some power. And they can last for months. In the middle of a bear market. Yeah. So
last week there were 2% of stocks were above their 50-day moving average. So that generally leads.
Yeah, obviously we're very early to that. But yeah. I mean, if you want me, I can pull up that chart, like say from 2002 to 2001. I mean, it's just humongous drop, and then all of a sudden they go above their 20 and 50-day moving average, and then they start going up, right? And there were quite a few. I mean, didn't go up, 5x, but it kind of doubled, tripled, from what, like 2 to 10.
Wow, and then it sold back off again. Man,
right before 9/11, yeah. I mean, it was just
wow, looking what a run these had.
Yeah, and after 99% drop. So
yeah. So what? I mean, listen, the internet ain't going away. The question is, like I said, Web3 has been a dud. And buying users on Web 2 is an expensive proposition. So this is going to be a painful, long bear market for many sectors. And I think the public markets are the best place right now to be. But understand too that like people like me are looking at munis, like people with money, like municipal bonds, you can earn 5. And then you throw on double tax, tax-free. That's like 9-10% interest in California for muni bonds equivalent. So there's going to be a lot of competition. Like if this goes to more of my industry, venture capital, like, all these young kids that like have these like 12 years of past returns that they're getting into the venture capital business based on that data. And if you're trying to raise money from accredited investors right now who are getting their ass handed to them, there's new products that they will be looking for, and that'll be munis, that'll be the stock market. So there's a lot of competition for dollars right now because this bear market has hit everybody pretty much hard.
So you're saying even if let's say you're 25 again, you will still put your money in munis, just
no, I'm saying,
is...
but me as an LP and potential other funds for the last 10 years, I've been putting money in other venture funds.
Okay.
Now I'm looking at munis in the stock market because I don't want to lock up my money for 10 years when interest rates are 4%. So many young people are out there managing money. So I think the worst performing sector will be venture capital for the next foreseeable future. But it was a hell of a run, right? You had 0% interest rate, you had software, you had Facebook, Twitter, LinkedIn to build your companies on. I'm not like I said, if you want to play tech, I think you got to go public markets, not.
I mean, look at this. This is a 15x move since 2009 low, so it's pretty crazy.
No, but in the startups, Ivan, it was like hundreds of times moved.
Obviously, in the startups will be magnified.
And I was a beneficiary of that. So I'm, relative, until I see something where it really, and again, crypto may be it, but not for me. It isn't. It feels like a bust. Not for the amount of dollars that are in it. I mean, like it's not a bust if you know what you're doing, but it's not like a global phenomenon. And
it's pretty global. It's just that it really destroyed a lot of wealth in the past 6 to 8 months. So we'll see.
There's no applications other than trading it.
Who the survival? Exactly. Yeah. So far,
that's not enough. That's a narrow industry. So, but if you understand the markets, I think the markets are the place to be. You just have to wait this bear market out and just kind of keep tuning in here for signals. Right now we're in a rally, which is great, but 2% of stocks are above the 50-day moving average. So you're going to get a rally. But I'm watching rates, oil's still above 100. And once July 4th is over, we'll see where the Ridley money starts flowing again.
I mean, I would say that July will probably be pretty sleepy and choppy because typically not much happens in July, but we'll see.
All right, buddy. Have a great week, everybody.
All right. See you next week.